So what do you get when you mix a government shutdown, a silver rally, and a central bank stuck at 0%? Well, more or less a market cocktail strong enough to wake up even the sleepiest Monday trader. So before you place your next trade, watch this. Hi everyone, Francois here, your market analyst from ATFX Africa, bringing you insights you need to start the week sharp and informed. Today we are unpacking the latest move in USD CHF, silver, and the Nasdaq 100. We'll touch on central bank chatter, safe haven momentum, and whether Wall Street's rally still has some fuel left in the tank. Let's kick things off with currencies, more specifically USD CHF. The Swiss watch keeps ticking. The Swiss franc is doing what the Swiss do best, staying calm, precise, and, well, slightly overvalued. The currency is trading just below 0.8 per dollar following mixed inflation data that left the Swiss National Bank scratching its head ever so politely. Inflation came in at 0.2% for the third month in a row, undershooting forecasts, while price fell again month on month after 6 straight rate cuts. The Swiss National Bank decided to, well, pause things a little bit, keeping its key rate at 0%, signaling that, well, they're done cutting, at least for now. However, US tariffs are putting pressure on Switzerland's export-heavy economy. Some economists whisper that one more cut could sneak in just before year-end if the franc stays too strong for comfort. Over in the US, Fed policymaker Stephen Merriam reminded everyone that the Fed prefers looking ahead, not in the rearview mirror. He emphasized that inflation expectations remain well anchored and that housing costs are key to the next policy move. Transition? Well, the Fed's watching rent more than rate chatter. Technically, USD CHF hovers around 0.796, up slightly for the day. The pair has been range-bound recently, and traders seem undecided whether to bet on Swiss stability or American policy shifts. Key resistance currently sits at 0.801 with support near 0.786. A break either side could finally give us some direction here. But for now, it's more of a chess match than a boxing match. Moving over to commodities, silver just hit a 14.5-year high. Yes, after 3 weeks, I'm finally able to add 6 months to my predictions here, saying it's not a 14-year high, it's a 14.5-year high, climbing above $48.50 an ounce. And yes, this commodity is shining brighter than a diamond at a miners conference. The US government shutdown is rising expectations of Fed rate cuts, which have investors piling into precious metals faster than Congress can miss a deadline. With markets now pricing in a 95% chance of a Fed cut this month and another potentially in December, the non-yielding metal has found its momentum to all sparkle. But it's not just macro drama fueling the rally. The Silver Institute projects a fifth consecutive global supply deficit, with outputs lagging roughly 100 million ounces behind demand. And add to that a failing bond yield and nervous dollar, and you've got a perfect storm for silver bulls. Technically, silver is pressing right against its 2011 all-time high, near $49.50. That's a level worth watching, traders. Not just because of resistance, but if it breaks, we are entering uncharted territory. For now, momentum remains strong. But don't forget, the higher silver climbs, the thinner the air gets. So while silver is having its superstar moment, one cannot help but wonder, will it be a Grammy-winning comeback or just a one-hit wonder? Finishing things off with equities. On Wall Street, it's been a story of optimism versus uncertainty. The Nasdaq 100 is trading around 190, up 0.45% from Friday night's close. And the index is up a whopping 25% year on year. Proof that AI hype and rate cut hopes are still doing the heavy lifting. So despite the government shutdown delaying key data like non-farm payrolls, markets seem unfazed. Investors are brushing it off like it's just another Monday glitch. Futures even ticked higher overnight, with tech stocks leading the way once again, a testament of how much faith the market has in the Fed's coming pivot. Fundamentally, traders are clinging to the idea that lower rates will boost growth and sustain the rally. But the economy, in partial blackout mode due to delayed data, is like trading with one eye closed. Risky, but strangely thrilling. Technically, the Nasdaq is facing near-term resistance at that 25,000 psychological level, while 24,800 remains our key support. The index appears to be consolidating after a very strong run, suggesting that traders are taking some profits while others wait in confirmation of the Fed's next move. As the week unfolds, all eyes will be on central bank commentary, particularly from the Federal Reserve Chair, Jerome Powell, and other policymakers scheduled to speak. Their tone could dictate not only currency flows, but also commodity and equity sentiment. So strap in. This week is just getting started. And with that, we wrap up your daily market brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Head over to ATFX Africa by clicking the link in the description and go and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.